See, in this question, Abhinav is a trader using the following information taken Abhinav's book on 30th June 2008. Prepare trial balance, prepare income statement, and prepare SOP. Three questions given. Okay, so randomly they given some heads of account: capital 54,000, drawings 1,300, premises 30,000, etc. up to cash at bank. Apart from that, a closing figure also given, that is inventory on 30th June. So in 30th June, this is end of the year. Okay, this is called closing inventory. Closing inventory. So closing inventory always will be outside of your trial balance, and opening inventory you can see here, inventory on first start of the date, start of the year. Okay, so this is opening inventory. Okay. So now apply the modern rules of accounts: assets, expenses, and drawings, liabilities, revenues, and capital. So assets, expense, and drawing will be debit balance, capital, revenue, and liabilities, revenue, and capital will be credit balance account. So here capital will be under capital, drawing also will be under drawing account, premises is asset, fixtures is an asset, revenue is revenue, purchases is an expense, inventory is an asset, carriage inward is an expense, carriage outward is also an expense, trade receivable is an asset, trade payable is a liability, discount received is a revenue, it's a received. Okay, so revenue. Insurance paid is an expense, sundry expense also an expense, wages is an expense, rates expense, loan interest is an expense. It's a finance expense. Okay, this is a little bit different from apart from the other expenses. And long-term loan is a liability, cash at bank is an asset. Okay, so these are the items which is given. Now we need to put all these items in our trial balance. So there are two sides for trial balance: debit as well as credit. So capital will be credit balance account, isn't it? Liabilities, revenues, and capital will be credit balance. So capital 54,400 will be in the credit side. 54,400 you can write in credit side. Drawing is a debit balance account, so drawing will be 1,300. Then premises is 30,000, it's an asset, so that you can write in debit side. Fixtures is 4,000, asset 4,000. Then revenue 82,000, it's a revenue is 82,000, means it's a credit balance account. Liabilities, revenues, and capital is a credit balance. So fixtures you can write here 4,000, it will be below. Fixtures 4,000. Yes, revenue it's 82,000, credit balance account. And purchases 70,100, so it's a expense 70,100. Okay. Then opening inventory is a asset, debit balance account. Opening inventory, the amount is 18,600, so 18,600. Then carriage inward and outward both are expenses. Carriage inward is expenses related to production, transportation expenses. Outward is selling and distribution expense related, and it's transportation expense. Okay, so 400 and 1,500. 400 and 1,500. Trade receivable 14,000. Trade receivable, okay, receivable 14,000. It's a debit balance asset account. Trade payable 8,000. It's a liability account. 8,000. Discount received 210. Discount received is a revenue 210. 210. Okay. Then insurance expense 390. Insurance 390. Straight payable. Okay. 390. Sundry expenses 340. Again 340. Wages 10,300 expense again. 10,000. Just post in the debit side again. 10,300. 10,300. Sorry, wages is another figure. Yes, same. Okay. Wages is same only. 10,300. Okay. 10,300. Rates 1,200. 1,200. Loan interest 500. Long term loan is a liability, so 10,000. 10,000. Cash at bank 1980. Asset 1980. Now you can check the both sides, debit and credit should be equal. Okay, so the modern rules applied here. The assets, expense and drawing will be here in the debit side. Liabilities, revenue and capital will be in the credit side. Otherwise it will not be equal. So check the debit side. 1,300 plus 30,000 plus 4,000 plus 70,100 plus 18,600 plus 400 plus 1,500 plus 14,000 plus 390 plus 340 plus 10,300 plus 1,200 plus 500 plus 1980 will be total 1,54,610. Same should be in here in the credit side. 54,400 plus 82,000 plus 8,000 then 210 10,000 also. 1,54,000 same. See here 1,54,610. So both sides are equal. Now we can prepare the second. This is A. Okay, question A. Second one is preparation of income statement. Okay. Now the income statement format is either you can prepare in 2 columns or 3 columns. So I'm doing 3 column. Okay, if there are only 2 column, you can put the net purchases figure in the inner column. First column, second column. Okay, so okay, I'm doing only 2 columns now. I'll show you how it will be. So this is income statement. So income statement, there are 2 sides, 2 sections. First section and second one. Okay, first section will be trading section. It's related to trading activities like production expenses and revenues. Okay, so here details will be there. So the equation for the trading section is gross profit calculation. Gross profit is equal to revenue minus cost of the sales. Okay, so revenue means sales minus sales return. So we don't have returns here, sales return here, so directly you can take sales. It's also known as revenue. Okay, so that is net revenue. So here revenue is checking 82,000. Okay, so 82,000 you can put in outer column because that is the main equation. Okay, so sales less cost of the sales, cost of the sales equation is opening inventory cost of the sales is equal to opening inventory plus net purchases minus closing inventory. Okay, so first you can take opening inventory here. So we'll start. So I am using the first column for that. Opening inventory. Opening inventory is the inventory, this one. Okay, 18,600. So 18,600 plus net purchases. So net purchases, the equation will be net purchases is equal to purchases minus purchase return, purchase return, okay, plus carriage inwards minus goods drawing. We don't have goods drawing in this question. Goods drawing. So we have only purchases and carriage inwards in this question, isn't it? So here purchases return also not there. So purchase is 70,100. So that I can take. If you don't have three columns, that you can take in inner column here. Purchases 70,100. 70,000. Then return is not there, and plus carriage inwards. Plus carriage inward. How much it is? Carriage inward is 400. So total we don't have goods drawing or any returns here. So 70,500. Okay. Now opening inventory plus net purchases less closing inventory. Closing inventory you will not get from your trial balance. That is extra item. Okay, that is 20,100. So take 20,100. Now you can apply the formula here. Opening inventory plus net purchase minus closing inventory. So 18,600 plus 70,500 minus 20,100 will be 69,000. So this is called as cost of the sales. This is cost of the sales. This is revenue. Okay, this is revenue. So the equation for calculation of gross profit will be, so gross profit is equal to a revenue minus cost of the sales. Revenue is 82,000. So 82,000 minus 69,000 will be 13,000. 13,000 is your gross profit. So next part is calculation of net profit. Okay, so this is the first section. It's called trading section. Okay, trading section, only this much item will come. Okay, so all other items will be taken in your P&L account. So the next part is profit and loss account. The equation for profit calculation, net profit is equal to gross profit, which we got now. Okay, 13,000 plus other income minus other expenses. This is the equation. So we will start with the gross profit 13,000. So continuously we will write. Okay, so add other income. So income is a revenue which will be in credit balance. So you can check only credit sides. Okay, so see here, trade payable is a liability. Okay, that will not come. That is not a revenue. Discount received 210 is there. That is a revenue. So take here discount received. Check, is there any other income? No. So directly you can take outer. If there are items, then you can use the first column for total. Here there is no other item, so I'm taking that in the last column. Less other expenses. Less other expenses. So what are the other expenses? So capital is a balance sheet item. Drawing is a balance sheet item, or we can say SOFP. Okay, instead of balance sheet, it's SOFP, statement of financial position. It is also statement of financial position. It's not expense or revenue. Only revenue or expenses will come here. Premises is an asset, SOFP item. Fixtures is a SOFP item because it's an asset. Revenue we already taken in trading section. Purchases taken. Opening inventory taken in trading. Carriage inwards taken. So carriage outwards. This is a profit or loss account section. Okay, trade receivable is an asset, so SOFP item. Trade payable is a liability, SOFP item. Discount received we taken here in P and L account section. Insurance is an expense, P and L account, it's expense. This is also expense, P and L account. Wages is a P and L account expense. Rates, P and L account expense. Expenses always will be debit balance. Okay, so you can check the debit side. Loan interest is also expense, P and L account. Long-term loan is a liability, S of P. Cash is also S of P. Okay. So here, carriage outward. We'll start with the carriage outwards expense. So carriage outwards, that you can use first column for the total expenses. Okay, so carriage outward is 1500, so I'm using first column for that because we have many expenses. Then next P and L account, discount receipt we already taken in as a revenue. Okay, because that's a credit balance. Now insurance 390, so take insurance here, insurance 390. Then so this taken. Sundry expenses 340, sundry expenses 340. Next, wages 10,300, wages 10,300 taken. Rates expense, okay, rates 1,200. Then we have, okay, see here, loan interest, while comparing with the other expenses, all other expenses means that is revenue expenses related to operating activity. Operating activity means the day-to-day expenses of the business, but loan interest is a different category, that is a finance cost. So it's not operating activity, it's a finance related. Okay, so you can calculate profit here first, then from that profit we need to deduct the loan interest. So that profit is known as profit before means profit net, before the net profit there will be a profit, that is operating profit. Okay, so we can calculate the net profit now. Just a minute. So here the total expenses we can calculate 1500 plus 390 plus 340 plus 10,300 plus 1,200, 13,730. Okay, so we have to calculate the operating profit here. Before, see, operating profit is the profit before loan interest. Okay, then only we will get net profit. So gross profit plus other expenses minus other income. So 13,000 plus 10 minus 13,730. So this is known as, so 13,000 plus 210 minus 13730. So here 520 is the minus figure, loss. This is called operating loss. Now we need to deduct the less loan interest also. Loan interest, because this is a finance cost, that's why we are taking it as separate. So we have 500 as loan interest, 500. So total loss is how much? 520, 500 less. So total 1020 loss. This is called net loss. So we have a loss here. There is no profit, say loss. So 1020 is the loss. Now we need to prepare statement of financial position. So before that I will write the equation for that. So the assets should be equal to capital plus liabilities. Here we need to find out closing capital. Okay, closing capital. The equation will be opening capital, which is there in your trial balance, opening capital plus net profit, if it is net profit. Okay, or net minus net loss. Here we have loss, so we will deduct it. Okay, apart from this, deduct the all drawings also. drawings. If there is an additional capital, that you can add. Okay, add additional capital. Here we don't have additional capital. Okay, so here if it is net profit, you should add with your opening capital. If it is net loss, you deduct it. Okay, now preparing SOP here. Statement of financial position, either you can use 2 column or 3 column. Okay, here I'm using 2 column because we don't have many adjustments here. So it's called statement of financial position. Okay, here details. So here assets, this is the main equation. Assets is equal to capital plus liability. We know that assets are 2 types, non-current assets and current assets, that we need to classify. So first you can write the heading assets. Assets, non-current assets. Non-current assets, under that you can classify now. So we don't want to take any profit or loss account item or trading account item. We can directly take SOP items. So capital, not capital, the non-current assets are, this is non-current asset. Premises, fixtures, non-current asset. Only we have premises and fixtures. So take premises and fixtures. Check the amount here. Amount is 30,000 and 4,000. So that you can take here in the first column, 30,000 and 4,000. Total 34,000. Next is current assets. Current assets. Under current assets, we can write closing inventories. We have closing inventory 20,100. Okay, that is a current asset, and cash at bank is a current asset, and trade receivable is there. Trade receivables 14,000, that's a current asset. Apart from that, we don't have any other current assets. So take current assets, closing inventory, trade receivables, cash at bank, right? Cash at bank. So check the amounts. 20,100 is your closing inventory. 20,100. The trade receivable is 14,000 and cash at bank is 1980. 14,000 and 1980. 1980. Okay, now check the total of current assets. 20,100 plus 14,000 plus 1980, it will be 36,080. So you will get total assets. Non-current asset plus current asset will be your total assets, that you can write here. Total assets will be 34,000 plus 36,000. Okay, 80. 34,000. Total will be 70,080. So total assets. Now we received total assets. Now capital and liabilities, that is the next part. Capital and liabilities, it's the main heading. Under that we can calculate capital. Okay, capital, I gave you one equation here, a closing capital calculation, opening capital. So you can write here directly opening capital, okay, instead of capital, that is opening capital. Okay, so opening capital, we have loss, right? So not plus, it is minus net loss. Minus net loss minus drawings. So if it is cash drawing or goods drawing, you have to add both here. Okay, so opening capital is how much, that you can check in your trial balance here. 54,400 is your opening capital, that which is there in your trial balance. 54,400. Net loss is 1020, right? So deduct that, you can put in bracket if it is negative figure or less figure. Then drawings, you have drawings here 1,300. 1,300. Okay, now take the items in outer column. I'm extending lines. So here 54,400 minus 1,020 minus 1,300 will be 52,080. 52,080, that is capital. Now we have liabilities, that is non-current liability first. Okay, non-current liability, we have loan, long-term loan, right? Long-term loan is a non-current liability, so that you can take here non-current liability, long-term loan 10,000. Only we have 10,000 as non-current liability, that you can take in outer column 10,000. Okay, then we have current liability. Current liabilities, creditors and trade payable will be there. So trade payables, how much it is? Trade payables 8,000. 8,000, that you can take here in the outer column because we have only one item. 8,000. Now check your trial balance whether we took all items or not. Rechecking trial balance now. Capital taken, drawings, premises, fixtures, revenues, purchases, inventory, carriage inward and outwards, trade receivable, trade payables, discount received, insurance, sundry expenses, wages, rates, loan interest, long-term loan and cash at bank. So now check the both the sides here. Just minute. If it is not equal, some items we missed, that's the meaning. So capital is 52,080 plus 10,000 plus 8,000. So you got here, see here, 70,080. Now check it, assets, and this is total capital plus liabilities. Okay, this is the total of capital plus, this is the total of assets. Here assets is equal to capital plus liability. So 70,080 is your total asset, it will be equal to capital plus liability 70,080. Understood? So this is called statement of financial position. Your asset will be equal to capital plus liabilities. So this is all about this question. So use the equation, and first you can do the trading section. So this section is known as trading section. Okay, up to gross profit, trading section. Then from the trading section, from gross profit calculation onwards, it's called P&L account section. Gross profit plus other income minus other expenses, you will get either net profit or net loss. Then you can do statement of financial position, or assets, non-current asset as well as current asset, then capital plus liability, then it will be equal. Okay, so this is all about this question. Thank you.